May 9th, 2022. This day will be remembered by many investors to be Crypto Black Monday, one of the most catastrophic financial meltdowns in cryptocurrencies so far. Now, on this day, Bitcoin prices fell over 16% in a single day and over 33% in just 4 days, while many other crypto coins fell as much as 50% or more in a single week. However, it was two specific cryptocurrencies that brought down the entire crypto market. They are Terra USD and Luna. Before the crash, these two tokens were one of the fastest growing and biggest crypto projects in the world, and the founder and developer behind it was Dokwan. So in this video, I'm going to explain what happened to these two once promising projects and how it shattered the confidence of the entire crypto industry. Now stay tuned till the end of the video, where we'll share with you a conspiracy theory that an attacker deliberately caused the crash and made off with $800 million in profit. But first, let me share a brief background of Dokwan. Do was born in South Korea, and upon graduating from high school, he moved to the US to study computer science at Stanford University. After graduating in 2015, he briefly worked as an engineer at Apple and then at Microsoft. However, he caught the entrepreneurial bug a year later and decided to start his own telecom firm, which was called Anyfi, which had moderate success. Now, it wasn't until he fully immersed himself in the crypto world that he found his biggest success. In 2018, he co-founded a blockchain technology business called Terraform Labs with his business partner Daniel Shin. The company's primary objective was to develop a decentralized cryptocurrency with stable pricing. One of Terra's cryptocurrency was UST, which is a so-called algorithmic stablecoin that is meant to maintain a one-to-one peg with the US dollar. Now, stablecoins are cryptocurrencies designed to protect holders from the wild price volatility of cryptocurrencies, so it can be used for payments or as a storage of value. However, the biggest concern about UST stablecoins was that they were not backed by US dollars or any real assets such as US treasuries or real estate. Instead, it was designed to maintain its one-to-one peg through a complex algorithmic model called burn and mint equilibrium. Now, this method utilized a two-token system whereby one token is supposed to remain stable, which was UST, while the other token, Luna, is meant to absorb the price volatility. Now let me explain how it works. So Dokwan developed a model whereby you had the ability to exchange one token for the other at a fixed value, even if the price of UST fluctuated. So let's just say, for example, Luna was trading at $100 and the price of UST fell slightly below $1. Now you could exchange UST token for Luna and make a profit based on the small difference in price in UST. Now that trade will result in destroying the quantity of UST, which would lessen the supply and hence cause the price of UST to rise back to $1. In theory, this model works, but the challenge was that up until 2021, hardly anyone utilized UST stablecoin, and Dokwan and his team needed to make it more appealing. So in July 2020, the company launched Anchor, which was a program that would pay UST holders an incredibly high interest rate of up to 20% annually to buy it and to hold on to it. Essentially what they were doing is they were utilizing a money-losing high interest rate to try to rapidly grow market share as a stablecoin. And it worked. At its peak, UST had over $14 billion in deposits, and soon after, Do and his team established the Luna Foundation Guard, which would buy up billions of dollars in Bitcoin as a kind of flexible reserves war chest and where interest payments were paid out from. But many weren't convinced that this model would work, and in fact, some of them called it a blatant Ponzi scheme, where you're utilizing new token holders' money to pay the interest for existing token holders. Then, things started to fall apart. Before I talk about the crypto market, I want to let you know this video is sponsored by Bitget.com. They are a global leading cryptocurrency derivatives exchange that is ranked number 4 in the world for trading volume and have over 1 million registered users worldwide. Now, Bitget offers cryptocurrency trading in both futures contracts and spot trading for all the cryptocurrency pairs. As well, they offer many innovative products such as the one-click copy trading, where you can copy and execute the trades of professional traders and benefit from their experience. And also Quanto swaps, which essentially allows you to use your crypto holdings as margin to trade derivative contracts in the easiest and safest way. Now, they're currently offering a special promotion for my viewers, so if you sign up for an account today and complete a trade for the first time, you will receive a $50 coupon. Please click on the link in the description box below to sign up for a Bitget account and start trading cryptocurrencies today. On May 7th, Terra USD, the largest algorithmic stablecoin, lost its peg to the US dollar. Now, spooked by this depeg, it prompted a few massive withdrawals of UST, where deposits fell from $14 billion to $11.2 billion. Now, as the UST stablecoin dropped, it brought its sister token, Luna, down with it. As the UST coin price continued to fall below its $1 peg to 80 cents, it added further downward pressure to Bitcoin, and crypto investors were losing confidence in the overall cryptocurrency market. Now, in fact, UST fell as low as 5 cents before rebounding back up, while Luna kept falling in an almost straight line down and collapsed to nearly worthless. Do and his team tried to deploy most of Luna Foundation's Guard's reserve Bitcoin to try to bring up the price of UST back up to $1, but it didn't work. Now, currently UST is valued at 10 cents USD, while Luna is valued at 0.000147 USD. For many crypto investors and hodlers who have never seen this type of catastrophic destruction, it wiped out those who were crypto millionaires on paper, and in some cases, people's life savings. Now, it's this reminder that the crypto industry is still very fragile and volatile. And this is exactly what I experienced in 2000 when .com companies were touted as the new economy companies and that they would be billion-dollar companies. So for every Amazon.com that survived the 2000 stock market crash, there were countless other .com companies who never made it, and this is exactly what I foresee in the cryptocurrency market. In fact, many crypto coins who have no monetary value or utility will probably go to zero. However, as we all know in the financial markets, whenever there are losers, there are also winners. Now, there are conspiracy theories out there that there was a concerted attack on the Terra ecosystem in which the claimed attacker made off with over $800 million in profits. In fact, some people compared this attack to George Soros' billion-dollar trade when he made $1 billion by betting against the British pound. And if you want to know what happened, you can watch a past video where I profiled George Soros. According to Paulo Ardono, the chief technology officer behind Tether, the world's largest stablecoin, he thinks that there was likely an attack on Terra. And he specifically said, if you have a weakness, you can always expect someone that's bigger than you to use that weakness. In addition, Dokwan likely upset a lot of people in the industry with his cocky attitude. Just about a week before Terra lost its peg to the US dollar, Dokwan bragged that there's also entertainment in watching companies die, as a reference to other crypto projects. However, the collapse was likely due to Terra's algorithmic stablecoin structure and UST's fast growth without the proper funds to back it. But the trigger that caused the house of cards to fall was the scenario when one cryptocurrency wallet dumped over $350 million worth of UST in an attempt to crash the stablecoin below $1. This would force the Luna Foundation Guard to sell its Bitcoin reserves in order to keep its 1-to-1 peg to the US dollar. And as a result, Bitcoin prices would fall due to selling pressure. So someone must have wanted Bitcoin prices to fall because they probably had a huge Bitcoin short position and would profit handsomely if prices fell. And if the speculation is true, this attacker or this group of individuals made off with $800 million in profit. Now, as I gather more details of this $800 million heist, I will share that in a future video. Now, for now, if I were to compare the current state of the crypto market to the .com bust in the year 2000, I think the crypto market will continue heading lower before it rebounds. And this means that you should continue to bet on further downside in Bitcoin prices and especially the weaker projects. Thanks for watching. Please let me know in the comments below, what do you think about the state of the crypto market? Is it dead, or is this just a temporary pause before the market recovers and reaches all-time highs again? I'll see you all in the next video.